All right, let's dive into two of the absolute biggest financial decisions you're ever going to make, taking out a loan and getting insurance. If you get these right, you are building an incredibly solid foundation for your future. But get them wrong? Well, that foundation could crumble just like sand. So let's make sure that doesn't happen. So I want you to ask yourself this, honestly. Are your finances really built to last? Could they handle a real shock, something completely unexpected? A lot of the time, the answer to that question comes down to how you've handled borrowing and insurance. It's the bedrock of your financial stability. And here's the real challenge, right? Trying to figure out loans and insurance can feel like you're walking through a minefield. The products are complex, the risks are long-term, and a wrong step isn't just a small oops, it's a super costly mistake that can weaken your entire financial setup for years to come.
So how in the world do you get through that minefield safely? Well, you get a guide. And this is exactly where a professional financial planner becomes so valuable. They're there to help you see the clear path forward.
Now, a good financial planner is not a salesperson just trying to push a product on you. Think of them as your financial strategist. Their entire job is to give you objective, structured analysis, making sure that every borrowing and insurance decision you make actually supports your big life goals instead of getting in the way. Okay, let's dig into our first big topic, borrowing. We're often taught to think of debt as this big, scary, negative thing. But what if we flip that on its head? What if we started seeing borrowing as a powerful tool, something we can actually use to build wealth?
And that leads to this huge question that challenges what a lot of us believe. Is all debt bad debt? And the answer really is a resounding no. The key isn't avoiding all debt. It's understanding the difference between the good and the bad, and then using it wisely.
This is where a planner is so helpful. They help you see the massive difference between a productive loan and a consumption loan. A productive loan, think a mortgage for a home or a loan for your education, helps you build an asset. But a consumption loan, which is often for stuff that doesn't hold value, can come with these crazy high costs that just drain your wealth away. What's so crucial here is the step-by-step process a planner brings to the table. See, they don't just jump straight to a solution. First, they help you really assess the purpose. Then they evaluate affordability, what you can actually handle. Then they help you choose the right type of loan. And finally, structure the repayment plan to be as efficient as possible.
And here's what that looks like in the real world. A planner helps you understand why a home loan, which is secured by the house itself, has a much lower interest rate than an unsecured personal loan. It's all about matching the right tool to the right job and, most importantly, keeping your costs as low as possible.
Okay, so you're using debt smartly, you're building assets, that's amazing. But now, how do you protect everything you're building? Well, that brings us to our second pillar, insurance. Think of it as your non-negotiable financial shield. This is the question that trips up so many people. How much insurance is actually enough? It's a really confusing landscape. If you're underinsured, your family could be at serious risk. But if you're overinsured, you're literally just throwing money away that could be going toward your other goals. A planner just cuts right through all that confusion by focusing on one thing, your specific life. No generic one-size-fits-all formulas. They look at who depends on your income, your family structure, your health, and even the loans you already have. The final recommendation is completely tailored to your real-life risks. So what a planner does is connect these specific risks to specific, tailored solutions. The risk of your family losing your income if you pass away, that's covered by a carefully calculated term life policy. The risk of a major illness wiping out your savings, that's what a critical illness rider is for. It's a logical, needs-based approach, not just guesswork. And a planner is almost always going to guide you toward what's most efficient. That usually means recommending pure term insurance. It's simple, it's cost-effective life cover. They help you steer clear of those super complex, high-cost products that try to mix insurance and investments, because frankly, they're often totally unsuitable for what you actually need. Look, making these decisions one time is a fantastic start, but life doesn't just stand still, does it? And that brings us to our final and maybe most important theme, the incredible value of having a financial planner as a long-term partner. It's such a simple but powerful truth. Your life changes. You might get a promotion, you might have kids, you might pay off that big loan. As your life evolves, your financial plan has to adapt right along with it. Otherwise, it just becomes irrelevant. This partnership isn't just an idea, it's a real, tangible thing. It's not a one-and-done meeting. A good planner sets up these regular reviews to make sure you're staying on track, checking in on your budget, reassessing your insurance needs as your family grows, and always making sure everything is still aligned with your big, long-term goals like retirement. And throughout this entire journey, maybe the most important role a planner plays is providing pure objectivity. They're that calm, rational voice that helps you avoid making decisions driven by fear when the market gets shaky, or by what your neighbor is doing, or by some flashy marketing campaign you saw online.
When you boil it all down, it really comes back to this one powerful idea: making sure borrowing is used wisely to build your assets, and that insurance is used effectively to protect that wealth.
And when you get both of those pieces of the puzzle right, the result is a financial foundation that isn't just strong, it's resilient. It's sustainable. It's a foundation that can actually withstand the challenges life throws at you and support all of your future growth. So, let's end right where we started, with that same question. After thinking all this through, is your financial foundation truly ready for whatever the future holds?